Hey, with the market sniper. He's a viper. He's a paperback writer. Paperback writer? Blimey, who writes these scripts? Fire the script writer. What do you mean it's me? Give him another chance. Give him another chance. Okay, let's get straight onto it. Precious metals. After comedy, 30 seconds. We're talking about gold. Gold. Look at the shirt. Oh, it's in the gold. It's in the gold. It's in the gold, or at least burnt orange. Anyway, so what's happening? Gold price. So marginally lower lows. So we're looking on the weekly. We start always on the big time frames. We know the monthlies. We know the big story. We've covered it so many times. Not enough has quite changed so far. So that's the monthly. You can see we got a little bit of a falling wedge, squeezy, marginally lower low there on the second week low, but there was some buying action. We did at some point have a certain degree of threat. The concern we had up top here with the gold is okay. Twice, being stopped over there. And then of course we had the COVID's 1984 level. That was the dip down here. A couple of times you reversed bounce. That was the big dip, and then back up, and then you had the flagging. So we've covered all of these technical patterns quite a number of times on this particular channel. So that would have been a double top and a neckline almost now for the double top. The 1680, I believe it was, 1700 it's showing there, but I think it's 1680 is our most specific level. But it's in and around those levels. There's no point of being hyper exact on a aggregated topic such as technical analysis. So many touches there, and we've slipped below that, and we are now on a bit of a falling wedge. Now, which kind of wedge would it be? Will it be a spiller, an absolute thriller all the way from Manila and the man-peas off the roof to the downside? Or, as in typical circumstances and slightly the higher bias, when you get a squeezy with a marginally lower low, you could actually get a pop taking you back to the higher side? That is the big question that we will be looking at, and we'll be looking at to try to give a probability-based response, because we are, of course, talking about the future and nobody knows for sure on precious metals what is actually happening. So we say goodbye. By the way, we'll be talking tonight to Palisades Radio, and while we're at it nice and early, hit that like button and give us one share. We do this for free with no adverts in there, and there's one thing you can certainly do that would be a massive support for us, is if you go to our YouTube channel and you are wanting to buy silver or gold, anywhere you can go and contact our guys. It's in their marketing budget. You do not pay more because you are following our link. You click on precious metals, order your physical and gold with pure gold right here. And you click on that there link. Click. And it'll take you to their very fine website. It's in the show notes of this YouTube and every other YouTube. You can go to any other YouTube and you will find them there. They like to speak to their customers like us. Good businesses like to develop relationships, are not looking at a transaction. They're looking at you from a perspective of many potential transactions, because you are wise. You have realized you are living in fake money world. And as a result, you have become wise to this, and you want something that does not rot, does not decay, has real scarcity, has massive costs of energy to extract out the ground that are only going higher, that therefore needs even further higher prices, and want to build and restore and retain wealth in absolute inversion perversion world, where George Soros has announced Britain should have perpetuity debt, should issue more debt, perpetuity debt, that is, never pay the capital, just pay a kind of an interest rate for a while and let it run forever. How about that? How's that sound in terms of the world of sound money? That's the advice the Ashkenazi machine is giving good old Britain in their pension malaise. So pop over to Pure Gold, have a chat with them, tell them who you are, and start accumulating, even if you do it small. By the way, if you think you're too small and you don't have sufficient to start, what you do is you go to Internet Gold Bullion Vault, and you buy yourself $50, $10, $20 a month of silver or gold on there. And when you get to a certain scale, you can sell out that and buy the actual physical for delivery in terms of that. That is the link just below Pure Gold. Go and do it now. Anyway, let's get on with the technicals, because that's why we're here. I've got a couple of very interesting things to show you as gold friends. And Pure Gold will deal with you anywhere, including the States, including Australia, including all the world. The whole whole world except Nigeria. Sorry. Oh dear, the racist. Okay, so back to this. So let's have a look at the daily. The daily kind of showing you that there has been a bit of support, but you did trade a teeny bit lower over here. This is usually a good sign because it shows some degree of bottoming, but we could still slip a little bit on the metals. We don't know. I don't think this is ready yet to pop. I wouldn't be shouting it, but you've had a better morning today, a 4-hour morning. Let's have a look at it. Let's have a look at it on the 2-hour. We've had a better morning, a little bit of a coming up on gold. But the interesting part of that is, what has silver done? Silver, the little sister. So you'll see silver has actually done quite a bit better relatively. So we are watchers of the gold silver ratio. But before I take you to the gold silver ratio, let's take you to the silver chart versus the gold chart just below it. So there we go. We're going to put not gold JPY. That's a great reminder, guys, that the currencies, how well gold has done is very relative to where you are based. So if we have a little look, let's make it even a 4-hourly. Let's make it a 4-hourly. There you go. 2 4-hourly charts compared to each other. They should be roughly under each other. Yes, they are. Pulimanda. There we go. And pull the September under the October. Let's go. Or pull the October under the October. There we go. Let's do that. So we're just catching a little bit more of the recent history. And you can see our silver's having a little bit of a better run and actually traded close to this recent high, while gold has just had a little pippy up. So gold's still looking a tiny bit heavier relative to the silver. So silver getting a better move. That is actually supportive for overall precious metals, but it does point to the potential of all the stories you've been hearing about COMEX not having sufficient supplies of silver, the UK not having sufficient supplies, the LBMA, etc., and silver actually being in rather short supply. Supplies. Yes, that will be a surprise. So back we go to the gold-silver ratio. We take you to that chart straight up and hit you up with that gold and silver ratio. So what's actually happened with that, as you can see from this, that you've had a bit of a breakdown. In fact, I prepared a chart for you. He prepared a chart. Yep, there you go. That's your gold-silver ratio. So this is a little bit about what's going on in the gold-silver ratio. That's the relative valuation of silver to gold. And going up is bad. So you can see we were going up. Gold was going down and silver was going down harder. In the blue corner, we have a head and shoulders. Left shoulder up at around the 87.75. You've got to remember, guys, that those are very close to 90 in terms of numbers. You actually traded on that head through the 90 valuation. And that, as I've shown in previous videos before, on the 3 monthly chart, that's 1 candle equals 3 monthly. Only 3 previous events have you gone above the 90 valuation. 3 previous events over, going back to, I'm talking way past in the 70s to today. So you are still at astronomical highs, still being at the 80s. That means you are only getting 1 ounce of gold for every 83 ounces of silver. I am not giving up 83 ounces of silver for 1 ounce of gold. This is a perversion of the market. It is the manipulators that don't want the canary in the gold mine tweeting too loud about the debt-based system that is dying, whilst they are announcing and telling Britain to issue new bonds that they no doubt within no less than a few years' time will be making absolutely jubileed out and can't pay any more. Time for a new system. What a great time to get free money just before everybody's credit card gets wiped clean. Issue more debt. And of course, don't forget, not so long ago, Austria, I think it was, had a 100-year debt instrument. That's right. How's those performed? Absolutely goddamn terribly. You're not seeing your capital value in 100 years. It's paying a chronic low negative real interest rates. Those investments have done diabolically bad. And as you know that they start calling for 100-year and perpetuatory debt, you know it is absolutely the beginning of the end market. Everybody wants to sell shit as everyone else is realizing that shit is shit. Before, everyone else thought shit was gold. That's why they called them gilts, because they're gold edge shit. And now everybody has realized it's shit. It's a debt-based system. Money is borrowed into existence. Too much of it has been done. Everyone is trying to steal the last amount of the money for the fools that will still buy debt instruments. And you should stay well away from that. buy bonds, never wear diamonds, wear coal. Okay. So back to this. And even that's unfair because I'm starting to look at coal as quite a valuable commodity at this moment. Anyway, so head and shoulders, break, a little bit of a rally back above your neckline, and then a spiller, an absolute thriller. That would have made your head and shoulders target, by the way. That was in and around the 90.5, 90.75 down to the 87.75. So that you will see is 3 ounces of silver per gold. Knock another 3 ounces and that would have brought you down to around the 84, which you have now made. I didn't draw it. Why didn't you draw the target? Show the people. They want to know. Show the people. They want to know. So it would have gone something like that, taking you from, as I said, 90.75 down to the 87.75. Kind of handy mathematics there. It often turns out that way, my friends. So you would go down to another 3, which would take you to the 84.75, which is below the 84.9, which is below, but above the 84.3. Roughly there, and you would target it out. And we draw our targets in purple. We have a beautiful annotation at themarketsniper.com where we cover all these things and how you could have seen these things were going to happen. You were going to get a little bit of a fillip on the silver relative to it. So that would be your target. And actually you've overperformed, and generally head and shoulders aren't just to their targets. They can be larger cyclical turns. But we're still only looking at a 4 hour. It is not a monthly head and shoulders, not a weekly head and shoulders. There might be a little bit more ebb and flow still to come. So we're not screaming from the rooftops. It's an absolute last chance. But I can tell you, this market, you don't want to overtime, because deliveries and premiums. In fact, I'm looking to do a real physical gold and physical silver in your hand chart, not the paper nonsense, for retail. So I would like to collect the data from 3 big providers such as Scottsdale in Arizona, Bullion, and Pure Gold, our affiliate below, in the link below for you to buy silver and gold, and also other precious metals. They've provided me with platinum as well. We'll talk about platinum versus palladium in a minute as well. So we're going to do a little bit of a metals. I was supposed to do a little bit of metals and then I forgot about it and I skipped in all the excitement. So this is your catch up. So grab those links below. You can start stocking and stacking, and you can use the Bullion Vault link if you're at a low level and you just haven't got the money and you just want to do $10, 10 Rand, 10 pounds, 10 euros, whatever, 10 useless fiat instruments of some form to start accumulating your internet gold before you cash it over. So that target was run, and now you're seeing another spill out of a rising wedge down on the gold silver ratio. That's now taking you to 83.724. Let me check with my glasses. Yep. Still in the 80s, my friends. That is absolute. It should be 8, according to the likes of what was it? Keith Newmeyer, he says they get about 8 silver ounces out the ground for every ounce of gold. And the price is too low to go actively looking for silver. They get it as a byproduct of most of their environments where they're chasing gold. Think about that for a moment. If it was not, people hadn't already paid for the hole in the ground already and all the extraction processes for gold. If you were just mining silver, what it would be all about. Plus, its industrial use, such as in solar panels and many other things that are being greatly pushed. The AI world, the green, the watermelon communism absolutely relies on more mining. How ironic, he said, he cried. We should take a picture because we've added new drawings. So there was a head and shoulder in there on the gold silver ratio, which is supportive of precious metals right now, good friends. It is supportive, and you have made the first target, but it is often part of a cyclical reversal on a longer time frame. So there you go. We can clean those lines, and we've got a better draw out there right now. So that's what's happening. And look at it spill even more. It's even worse on the live charts and the update. So we are actually dividing the gold by the silver and getting an authentic valuation. We're not taking anybody else's data versus live in the spot market. So it's 83.3. So that's part one of all of this that we wanted to talk to you about on metals. There's another aspect we want to discuss. And I want to discuss against other currencies. Say, for example, you were to take XAU. So this is most of what we've done is on the dollar-based prices. And we've also told you about how dominant the dollar has been. Part and parcel to hide the strength of gold and to reduce the effect of expensive oil and the inflation, and to export that inflation to the other nations that are not on the dollar. But if you take for a moment, you take a look at, let's say, gold in pounds. and you have a look at that and you look over the past, in actual fact, you're very close to previous highs. We called, by the way, yes, we called the gold top during the gold bull market run, and we even nipped the wick on a final little wind-up HVF that got you out over there. Then you had this bull, but the interesting part is you've come up to this twice before, since. This is 3 times a lady, once, twice, 3 times a lady, 1577 on GBP USD. And you are actually not that far away at the current pound level. You're at about 1430. If you take a monthly chart, look at that. Tell me that gold has not served your purpose since 2007. If you are in Britain, tell me that gold has not served you well since the 2007. So you could have got it at, oh, wait for a minute, around £292. Gordon Brown, of course, dumped the lot. If you do that to where you are today, you are at 1427. 1427 to 292. Must grab calculator. Let's see. 1427 divide 292. That was, of course, the low of around 2006-7 equals 4.888. 4.888. You see it. You see it. There is no lie. Casio or Sharp does not lie to you, whatever it is. So 5 times, rounded up to 5. Look, it's assuming you bought the low and you're at the current price. It's not to the current high that you've had. So that's 5 times on your fiat devaluation since 2007. And because I'm so bad at maths, I'm going to go 2022 minus, let's say 2006. 16 years, 5x. 16 years, 5x, or 4.88 if you insist. So I'll divide that by, so 4.88. 4.88 divide 16 equals 30.5. 0.305. So you've had about 30%, 31%, if you will, return by getting out of your pounds in the peak GFC mania of property everything and holding gold at the current price while it's actually selling off and a little bit soft gold, apart from that last little pippy pop over the last hour or two that it has given you. So it is preserved value. It has preserved value. 31% roughly is your aggregate average over that time. You have actually done 5 times on your money versus if you had kept that money in the bank for a Brit. So why have you not already clicked the Pure Gold link and got on board? I do not know. And if you think this is a strong moment for gold, I'm here to tell you that it's going to get far more strong and that it's actually almost benign indifference. It's winding up for its next break. And if you think it's not going to break hard, let me tell you, with a level like that, the purple level of 1577, where you've once, twice, 3 times been resisted, I do not see it falling that far again. Certainly down there was how far it fell the last time. So there will be clear buying opportunities during this period where your pounds, and then when you break that level of resistance, my friends, I expect it to be furious, because this is very much in the category of, let's take it out of the mega time frame, the monthly, and go back to our weekly, because we took you into the sky there and went super macro on you. That is very much in the category of a potential rising squeeze structure. So you have a flat top of resistance that's running through there, and you have buyers coming up and buying the dips. Squeezy, that Japanesey, that ceiling, looking for that, not the trapdoor on the ground, but the loft, looking to blast out the ceiling and through the roof. That is what's coming. But initially, a bit of a slap down, an allergic slap down. So opportunity exists. And some of you will say, well, that's just Britain. Well, my European friends, let's see how you do there. Gold versus the European. And by the way, silver's outperforming gold at the moment right now, which is usually a very, very bullish sign. Don't forget the euro has lost out on parity. Let's take it up to the monthly as well. So there was our macro call on an HVF when you, 2006 in good old Euroland. The low that I have available for the data was 349 euros. 349 euros. Mathematics brought to you by Sharp Calculators with, what's it called? LC mate. I thought it was going to say estimate. That's not very good for a calculator. We'll have an estimate. Let's have a guess. Dartboard. No, it's LC mate calculator sharp brought to you all the way. A little bit soft again, still on the macro. So it's not at an all-time high. And in fact, last time, unlike the pound, it crept out of the top, and I actually see a squeezy Japanesey rising wedge, which will at some point after it bases out probably rally again and then pop to the top, because people are buying the dip, the goddamn dip. Yes, my friends, they're buying the dip on these. That's what I would predict. But first, maybe a bit more softness to come through. This is not a trend line. This is me just drawing it. So euro, what did I say? The low that we have, and we don't have most of the data, but we'll just take it as a point. Sub 360. So we'll say 355, shall we? 355 euros. 355 euros. What is it currently at the moment in terms of its current price? Help me. I've got too many lines there. What is it saying? 1657. Divide 1657. So we need 1657 divide. Clear that number. 1657 divide 355. 4.66. That's how your money's been spared. And we don't have the full 2006 data on this chart. Plus, you got a really pumpermentals upside HVF call from us. We bought the falling wedge there. And you got a zoom and you ran that target. That was super quick money. That's when you use leverage, when you have a real distinct move in your favor. Oh, look at the pullback at our second interim. You think this HVF method is just a joke? Look at that. The joke's on everybody who never took it, who's not learning how to become HVF method traders. You can occasionally use leverage when it's in your favor. The rest is investments. The rest is unlevered. Be careful. Leverage bites. We teach you how to use it judiciously at key moments where the market will single-mindedly move in your favor, as was that period there. And it shall come again, my friends, but it's not yet here. It's not yet here. It's not yet here. It's not yet here. It's still a bit soft. So 4.66 times your money from 2006 to 22. 6 from 22, you'll be coming out with 16 years again. That should be the same answer, shouldn't it? So that's pretty good. Pretty good retention of value. And it is not yet begun to fight. Gold and silver has not yet begun to fight. So I also said I'd talk to you about palladium and platinum and the two of them. Now, palladium relatively now is actually looking quite soft. Why? Because palladium has a little bit of industrial use, and the economy, she not so good. The economy, she not so good. The debt system, he failed. And all the purveyors of Ashkenazi debt tertiary extraction just before a Jubilee period and the central bank digital tokens, an entire reset and a whole new economic system that will see them get money for free that'll later be written off. Only you'll still owe your mortgage. You'll still owe your credit card. You'll still owe all that good stuff is killing the economic productive environment, and industrial metals are coming in for a little bit more of a tough time. This even could represent a head and shoulder, potentially very spiky left, long rangy head, and then that actually spoilt it because it had a super wick, but that's an imperfection. I don't rule out that could turn into a more serious reversal, but it has to be looked at. It's still rare to a degree, but industrial use could fall away immensely, and it's not the first call for monetized metals. Gold and silver take first, and platinum will also take before palladium. So my overall opinion is palladium is the future underperformer for a while, having chronically overperformed as we pivoted out of diesel. Diesel bad now. Diesel bad. And there's a shortage of diesel everywhere in the world. I think things that are getting have a shortage are actually quite useful. Engineered shortage. Apparently America has less than 25 days of diesel available. What does the military industrial complex run on? You guessed it, especially the ground forces, tanks, jeeps, everything. Diesel, that's right. And other countries too. I've told every other country for the last 2 years, particularly hoard diesel. You need to do special things to maintain it so it doesn't go stale in your tanks if you're holding it for more than 2 years. There's a lot that goes into this, but do not be caught short. Are they going to force everyone to pivot out of their diesel 4x4s into the petrol version, as the diesel price has now passed the petrol version in this country that I am now in? And I'm expecting that to happen across the world, even though it is a lower octane concept. Why? Because they need it for their military. They need it. They want you out of it. So they'll push the price. So that's palladium. A little bit more cautious outlook on palladium. So let's do something we haven't done before, because palladium ate platinum's dinner a little bit. So I'll quickly show you the platinum chart. The platinum chart, looking a little bit less sickly than the palladium chart, but not had the run that the palladium had. So platinum has been the great unloved for a number of decades now, since everything. It's really been. I've grown up my entire existence. Platinum was significantly more expensive than gold. It's rarer. It's far rarer. It has unique properties too. But it did break out of this falling wedge, and it did a revisit, and now it's a little bit more uppity up. So the chart I really want to show you is, what if we took platinum and we divided it by palladium, which is where they have been a little bit in competition with each other on the industrial use, and we saw the end of platinum being used industrially, and we saw the beginning of palladium eating its lunch, which, as I've already said, was the diesel pivot on catalytic converters. So as you will see, at one point in and around 2008, the platinum to palladium ratio meant that for 1 ounce of palladium, for 1 ounce of platinum, you got 5.52 palladium ounces. So platinum at that point in 2008 was 5.5 times more valuable by perception, relative value. Down here, you could not, with an ounce of platinum, get a third of a palladium ounce. You could not, with an ounce of platinum, get a third of a palladium ounce. The concern with platinum, it's only really big found in South Africa and Russia mainly. There are other nations now that are digging it up, but not quite to the meaningful nature of those two nations, and it's exceedingly rare. Are we going to see a pivot back in that relationship? I think it was extreme. It was an extreme industrial scheme that may have pushed the markets into a real relative valuation dystopia, which might correct. Anyway, so the question here now is platinum going to start recovering relative to palladium? How does platinum look to gold and silver? Well, we can do that one too. Let's go gold. Let's bring him up. We'll go GC, gold contract futures on COMEX, current continuous contract, shall we? So let's have that, please. GC1. And up we go, and we'll see the relative valuations of palladium versus gold as well. So I just said palladium, I meant platinum, sorry. So we're talking about platinum actually showing a little bit of life. Now, it's had many a false dawn, it has to be said. So, you've got to put this on your watch list, and you've got to decide. In the end, that was a rising wedge that saw it spit back down. That little rally didn't survive. Then it had an absolute final capitulation. Now, I love to see final capitulations that later get engulfed. You see that? Final capitulations. That was less than 0.4. That meant 1 ounce of platinum got you less than 0.4. You're at 0.395 of gold. You got a snapback where technically that overrun the point of spill. And then you got a pullback that never made a new low. So you have now had a higher high and potentially a higher low. My apologies. So now you've had high, low, higher high, higher low. Is this something that you should be watching a little bit more of? If we look at the long-term rising wedge, you often have a final capitulation through the baseline of the wedge. If I was drawing HVF method, squeezy, Japanesey, ooh, the yen. We got to look at the yen versus precious metals. That would have been the final spill through the wedge that we can refer to as a type 2. You can go learn all about the different wedges and how they give you information and why constrictions in volatility lead to the best risk-reward trades. Hence, we specialize in doing one key thing. Trading low volatility to high volatility expansions where you can get facilitated with a tight stop, and you can use an early entry that gives you an explosive move to the upside that has a higher probability of occurring than the massive multiple you get on the risk reward side. These are key moments of trading that you should be exploiting, and they should be the only trade types you take. In other words, is the juice worth the squeeze? HVF method finds those opportunities where the answer is yes. 3Ws, themarketsniper.com. Go book a call, have a chat, not with a salesman, with a pleasant, likable, decent person who's part of a member of our community. We expect you to be respectful and kind too, to prove that you would be a worthy addition to our community and will benefit from what we have to offer. We do not want to do things that don't benefit people. We don't have to have anybody's fees. Okay, so that's the platinum market against the gold market. Falling wedge, type 2 exhaustive spill through the base and a pop out the top, a return move. And now, is this not a bottom call for platinum's relative valuation? We've looked at it against palladium, its big rival that killed it and ate its dinner. We're looking at it at the base god market of precious metals. Gold, smack that ball out the park. There are signs of revival in the platinum market. Could it be the next rhodium, the flyer? Yes, because it's difficult, it's rare, it's unique, it's hard to find, it's bloody expensive to get, and countries like South Africa, well, we don't do power all the time. Yeah, switch the mines down, who cares? Good old Eskom. The control structure of Ashkenazi occultic Satanists want to accumulate that little economic enterprise on the cheap once it's largely deemed worthless, and then to phoenix it up under their new awesome management and charge you all extra money for your provision of electricity. Yes, we can see that one coming. So we continue. What about platinum divided by silver? Now, you all know I'm a silver fan, but, who knows? What will we see? I don't even know. I haven't done this one yet. So we go SI, silver futures. We find it on the COMEX, that paper price, which, as I will say, you will not be able to procure for. And the real silver price is the cost it takes with delivery charges and everything else to hold that little ounce in your grubby little mitts delivered to your door, 4 nines pure at pure gold, pure silver, pure platinum on the website that I gave you. So you can see that wedge almost fits over here, although it's a slightly bit more volatile. Let's see if we can get a little bit more history. We are looking at the relative valuation of platinum against its friends and its substitute, which was palladium. So back we go. Similar type structures going on here. This digged really deep because when gold is strong, silver is super strong. So you have the massive sell-offs, but then you get bigger rallies as well. So the volatility is generally more volatile in this relationship. Why? Because the beta of silver is higher than that of gold. Split and split and split. Why do we split wedges? You can find out about this and more at the www.themarketsniper.com. So we look at that falling wedge, and it does also look like you have broken through that. Have I drawn it the most strictly and tightly? I can double line up. Was there 2 instances maybe where it was maybe just sticking out slightly? Let's do that. So maybe it's just on the verge of breaking rather than having broken. We talk about the 3 impulses in a falling wedge. Yes, sir. How many have we had? Let's see. Help me count. I'm not so good at the maths thing. Let's have a wee look. Up, 1. There we go. Grind along the top. Spiller, absolute thriller, all the way from. If you just said Manila, go and hit the like button. You passed the test. Good man. You are a watcher. You are a student. You are a learner. Yes, across, grind along the top. Spiller, absolute thriller, all the way from. You said it again. Same answer covers you twice. We give you real value here on themarketsniper.com. Green impulse. What number is this? Count with me. Ooh, bounce. Little bit of a grind, and squeeze along our splitter. Yes, and now a pop out the top. You're either going to break here. That was your down leg from there to there. Or there's a slight possibility you roll over one more time. You could even come all the way down. So are we early on the call for platinum? I don't think so. Providing you're looking at monthly charts. Remember, monthly charts doesn't mean tomorrow, moon shoot. No, monthly charts mean you got to wait around a bit. It's going to look like an ice melting. But at the end of the day, when it gets hot, the ice does melt. And you get to the end, if you go and get yourself busy with something else, like making money, buying your billion vault, accumulating monthly dollar cost averaging, getting a lump sum of 10 grand, turning it into physical, going to pure gold, getting it delivered to your home, you will have time to build up assets that will secure you in a world where they are talking about perpetuity debt issuance. Good old George Soros. Probably never seen a war. He hasn't won a fund. and never seen a market in trouble that doesn't deserve more debt on top of it and an even more flakier payback system. These are your friends. These are your friends that are coming to save you, my good friends. And if you believe that, you should not click on the links below in the notes on every single one of our YouTubes. And you should not protect yourself. You should not believe in sound money. You should Soros out on debt. Yes, indeed. So that is potentially a third impulse that may already have occurred and could be featuring a break. As I've said, it's still a monthly chart. Things move slowly. It's like a glacier, but you leave it for a while, you come back, and it's moved. Okay, so that is the point that says platinum could be looking pretty okay. You've got to remember, most of my child to adult life, platinum was in and around 30, sometimes 50, even double the price of gold at times. It is super scarce. It is super scarce. Palladium looks sick. Palladium was the one that was eating platinum's dinner. Okay, we've said enough on that. It's the market sniper. Also, bear in mind, we've looked at certain charts and versus different currencies. So why not just show you silver against the Japanese yen, for example, and we'll also show you gold. You can see the COVID dip low on the big time frame. It's not been a problem for silver. It's close to recent highs. The last recent highs also clustering around a level. Remember this, friends. Clustering around a level, in and around, and I don't know how many yen that is. It's about 3,150, who knows, 3,150 shit tokens of some form of highly proliferated fiat. That's my overall view. Down you got a little bit of a kick. Let's do it with the TG pink. A little bit of capping there. Capping. Again, let's try to select the pink. Sink that pink. Down, and now you're creeping back up into this range. When this level properly runs and we hold, expect a major move. That will surpass that. That was all one squeezy as well that led to the pop of that. Even that has a cranky 3 impulses, the first usually being the biggest, the second, then you had the spike third with a capitulation before you got the pumpermentals. I wish I'd said that before and warned you about these facts and had a website where I taught people about these things at themarketsniper.com. Did I mention that? I'm sorry if I'm repeating myself. There you go. Off you go. Break to the upside. This is likely to turn out to be continuation despite that marginally higher high. So that is squeezy Japanesey. But you could have a recession and paper price could crash. I still think I'd rather be holding the metals, thank you. At some point, the truth is always winning out. Kind of like the COVID's 1984. Are we having a Nuremberg for all the corporates that made money out of lying, coercing, all the politicians that forced, put pressure, blackmailed, people that were fired for not... It's time. I think we need a Truth and Reconciliation Committee. We need a few Nuremberg trials. They can be proper kangaroo courts. I'll be on there. They can all start guilty. Just like the last one. They can all start guilty. We can do a bit of light torture. And guess what? We can do a few beheadings. Who says I? If you say I, hit the like button right now. Share it to a friend. We're talking precious metals. We're talking freedom. We're talking the anti-World Economic Forum, non-governmental, libertarian, free, sound money policies that go with this orange shirt as much as anything else. Yes, I'm the market sniper. Yes, I'm the crypto sniper. Yes, we have an event on the 11th of the 11th, 2022. You need to be there. You need to go to the pinned comments in any of our YouTubes and say, make sure I'm subscribed. Make sure you remind me. We are going to talk to other like-minded people that do not feed on the bullshit, the lies, the coercion, that smell the truth and can smell the deception a mile off and are telling you where sound money is. And here's where it's at. You've learned from me today that gold and silver ratio is turning down, which is generally positive, particularly for silver. You've also looked at platinum and realized that platinum could be at a technical low, providing you are patient, providing you are not using leverage, you are using investment and you are giving it time, providing if you are wanting to accelerate that, you do a course or program with sound people that tell you when there is a squeeze and how judiciously to use leverage that you can add a little bit of fuel to that fire when the upside comes. Thank you for watching. Thank you for sharing. I will catch you later. Look out for our video on Palisades. That will probably go out later this week. I'll be talking to my best boy tonight and more. Thank you very much for watching. And this is to honor you for not covering gold and silver suitably in a previous Market Sniper video. Because of my excitable self, I skipped on to many other things. Catch you next time. Thanks for watching.